Good day. I'm Epstein with your metal market wrap-up, and this wrap-up is for the evening as we're here now on Wednesday. And we're at the 5th of February, 2025, and we're just after 5 p.m. Central Time. So in looking at the markets, you can see gold's down about $8, $9. You've got the silver down 20 cents. You're even backing off in copper, which has had a neat little rally from the 420s back up into the 440. So pretty good action there, and you're down in the platinum. I can share with you today that in GLD, I was telling my clients on the rally early this morning, start grabbing some and cut your position down. The beauty with trading ETFs over futures, depending how much money you have, obviously, is you can say, oh, I'm 100% long, meaning let's assume you bought 100 shares and you want to take off 20% or whatever. You can do that in futures by using the mini contracts and do that same process. You build your position, then you cut it down. So there are ways you can make that very similar. Bonds and, well, first let's go to the energies. Energies set back today. You're pushing the $71 area here. On the interest rates, the bonds and the notes, well, you're back into the 442 area in the 10-year notes. Weren't we just up at 4.8? So that market has fallen back. So basically we've got, if you think about the first 2 weeks of the Trump presidency, a stronger stock market. It's not running away, but a stronger market. We've had falling energy prices. We've got interest rates that have slipped back. And now the question is what to do with this dollar, because if you'll remember, I had what's called a price count against the 110 area. I think it was 109.83 or something. It got up into that zone, and it has fallen very hard. Is this market still bullish? What is it? I don't have the answer completely, and we'll see why in a minute. Now, you did have today the ADP numbers, and you saw that the jobs market right through the roof, very good, adding way more jobs than you thought. Tomorrow, we're going to get the Challenger Group. Now, they come out with corporate planned layoffs. So we'll get that out at 6:30 in the morning. I give the estimates in my subscriber videos. I don't give them to you here. So you don't get all the data for free that I give elsewhere. This is basically a feeder into my subscription areas. Jobless claims, I give what they're looking for there. And that comes out at 7:30. Non-farm productivity comes out at 7:30. With the colder weather and now that dissipating, they're only looking for a draw of 170 billion cubic feet in the natural gas. And that compares to last year's draw of 110. Last year's, and an average of 174, so about normal. And you have that report coming out at 9:30. But what's really been going on is traders trying to figure out where are we and what do we do. Now, I did hear something I wasn't crazy about hearing, and that's that bird flu apparently has infected a cattle herd in Nevada. I don't know any more than I read the headline on that. We'll see. That's the first time I've heard that, and I'm not quite certain what that means for everything. So things you got to think about. So as we take a look at the gold market, you're up 2% plus at this point for the week. You're up $59, been a beautiful ride to the upside. And as you can see, you stuck your head up and you're backing off a little bit from that. I'm certainly not in the bear camp, but the market looked to me like it was getting a bit overdone. I'll show you why. You're now going to get to the point where I've been waiting for this to happen, where the 18-day average is just about where the last break low was, which means the market can afford a break because this will keep marching up. I mean, I guess you could say you could fall all that way in one day, $80, but you need some major world event, and I don't know what that would be. You keep hitting the upper Bollinger Band and pulling back, so I like that action. And you can see you have the embedded reading. So as long as you get a good pullback that isn't overly deep, and you keep the embedded, I think the pros will come in and buy. I cover that first thing in the morning at 6 a.m. when we review the charts overnight and we come out with our buy and sell signals in my subscriber video. The gold-silver ratio is still favoring silver getting a bit stronger than gold. As long as you're under the 18-day average of closes, that means that silver on a relative basis, the lower the numbers go, you need less ounces of silver to get 1 ounce of gold. That's how many you would need. And in the silver market, like the gold, you keep hitting the upper Bollinger Band, backing away. The difference here is you don't have the embedded reading. You're just overbought. So each time the market finds support at one of these key numbers, you come up here, you back off. Now, keep your eye on this. Look at how the 18-day average is getting ready to give you a bullish crossover. Now, if that occurs, you would have the 18 over the 100 already over the 200. That's what traders look for, and you would probably start attracting more money until that pattern gave itself up into the silver market. In the copper, what you've basically done is you've gone from the lower Bollinger Band, where I think short covering took place, to the upper band today, where I think the bulls are coming out. That doesn't mean I'm bearish. It's not what I'm saying. But when you get to these numbers, that's pretty much what I teach in my charting course on enhanced Bollinger Bands, and you tie it together with the momentum in the market. You're overbought into that area. I think the professional money's taking money off the table. In the platinum market, as I said to you the other day, we cleared the hurdle of the 100 to 200-day average, and now, similar to what silver's doing, look at how the 18-day average is attacking the 100. Are we in for another level of a bull market in all the metals? When moving averages cross over bullish, it gets you thinking about it, I will say that. In the dollar index, you stepped out of the uptrend. You now have a higher high and a lower low. I should have had that arrow pointing down from the top here. And that's a market that's got problems. So now what you've done is you came up and you double topped against this level right here. Do you remember when I did my dollar report? I said to you very clearly, up right over here when the report came out, I thought you could break. And then I thought you might go for the third flip of the window. Of the price count, which was at that time, I think it was 109.80. I'm even surprised how accurate the price count worked out on that. I mean, it was a really good call. Now, guess what? I think you're in the middle of no man's land. I don't see a trend. I see you've stepped out of it. These waves are just sort of back and forth. It is a time to do this. I want to think about what's going on. And that's right where I happen to be on this. One of the things that I'm watching right now in the market are pivot points. Now, if you have a good charting software, I'm not talking the freebies that have 3-4 studies on them, something reasonable, watch out. You might want to learn about pivot points. Pivot points take the prior day's range, and you get what's called a point. You figure out the pivot point. It's all done for you on your charting service. Believe me, if you open it up, it's all done. From that, you're going to get a series of points to use, and they are called resistance support levels, and here they are. So you get your pivot in white. You get what's called R1, which is resistance 1, R2. Could be called sell 1, sell 2. Then you get S1, which is support, S2, the other support. And the market likes to move in between these, and that's what you're looking for. You're looking for ways. You're not using a daily chart to trade off of. You're using a 5, a 10, a 15-minute chart, your preference. I teach how to do it for free in my videos that I put together for you. I put together a free course so you can work with all this and learn my technique of doing it. But, you know, everybody's got their own, and the idea here is you get a little knowledge, you run with it, and that's the idea. And I tie it with my stochastics, because I believe that when you tie momentum to what that's doing, you get another edge with it. Do I think a lot of traders use this? Oh, yeah. Oh, yeah. As I said, we have a full video series for you. It is free, no credit card, nothing that you need. You go to iraepstein.com, free offers. Be on the left side of the website. Move your cursor if you're on a PC to the top here, and you'll see an icon. Work with that. But this is something you want to take a look at. There's a lot to be done with it. Learn. I'm Ira Epstein. I'll pick up with you all in the morning. You have a great evening.